If you've spent any time exploring income-generating ETFs, you've likely come across MSTY, the YieldMax MSTR Option Income Strategy ETF. With monthly payouts that range between $1 and $2 per share, MSTY offers one of the highest yields in the market today. But that naturally raises the question, how much MSTY shares do you really need to retire? In this video, we're going to break down MSTY's payout structure, the risks, as well as how to realistically calculate how much of it you need to achieve financial independence. So let's go over what is MSTY. MSTY is an actively managed ETF exchange traded fund that aims to generate monthly income by selling call options on MicroStrategy MSTR, a company best known for one of the largest corporate holders of Bitcoin. Here's what makes MSTY unique. It doesn't actually hold MSTR stock directly. Instead, it uses a synthetic covered call strategy, which mimics owning MSTR, selling call options against it. And this allows MSTY to generate a high option premium income passed along to shareholders via monthly distributions. And as we can see, it currently has a distribution rate of 143%. Now keep in mind, this is the forward 12-month annual yield, assuming that the latest dividend is going to continue for the next 11 months. And we do want to mention that MSTY is designed solely for income generation, not necessarily long-term capital growth. As we can see with the all-time chart, it really isn't going to grow much in capital appreciation. And we can actually see that MSTR is actually up way more than MSTY, 2,865%. So this is going to be the growth equivalent. If you're looking for capital growth long-term gains, MSTY may be suited best for you. But for income option investors looking to capitalize on the volatility, MSTY has done a phenomenal job of maintaining its high dividend yield consistently over 100% due to the volatility MSTR brings. So this raises the question, how much income do you need to retire? Before determining how much MSTY you need, define how much monthly income your ideal retirement requires. So here's going to be a quick breakdown. Now for most people, they're going to need around $5,000 to $6,000 per month, which is going to be between $50,000 and $72,000 yearly. But for most people, they want to see six figures, which is going to be $8,333 every single month to earn $100,000 before taxes from MSTY or other dividend producing assets. Now let's take a look at the dividend yield of MSTY. So it's currently trading between $21 and $22 per share, and the monthly dividend payments have reliably been over $1 if we take a look at the history. It's gone as high as $4 per share, but we're not going to be including that in our calculation. We're going to assume that it will be between $1 and $2 to be relatively conservative. We don't want to get our hopes too high, even though our last cash payment was well over $2 per share. So if we take a look at this chart right here, we can see two different scenarios. Scenario A is going to be $1 a month dividend, which is going to be conservative. It's never dipped below $1 per share, so this is relatively safe to assume we're going to be paid at least $1 per share. The target income levels, we can see if we want $72,000 per year in dividend income, we're going to need 6,000 shares. Because if we have 6,000 shares, we're going to be paid $1 per month, and that's going to be $72,000 a year. So our total investment is going to be $132,000. Now this may seem like a big number, but take a look at how much you're making in income. This is really unheard of in the dividend investing world, and this is actually a very low investment amount compared to other dividend ETFs. Now scenario B is going to be a little bit more moderate aggressive, $2 per month of dividend, and as we can see, we're going to need a less investment, only 3,000 shares, which is going to give us $72,000 a year in option income. And the investment is going to be half of that. We're only going to need $1,000 to put into MSTY at a share price we're assuming at $22 per share. And remember, currently MSTY is $21.55, so it's going to be even less. We do have to take into consideration that these distributions are actually not qualified dividends like a normal dividend stock or dividend ETF. They're taxed as ordinary income, which can take a chunk out of your net income depending on your tax bracket. For example, if you're in the 24% federal tax bracket, your gross income being $48,000, after tax you're only going to be left with $36,000. So a lot of people are paying hefty tax bills because this is being treated as income. So let's go over some of the risks. The first risk is going to be the underlying volatility. MSTY's income relies on option premiums derived from MSTR's volatility. So if MicroStrategy ends up becoming less volatile or even crashes, the option income of MSTY could shrink. And of course, we have the second risk, which is going to be price decline. So if MS ends up crashing all the way down to say $100 per share, we can safely assume that MSTY share price is going to go down as well, because it does have exposure to MSTR. And even though this is an ETF, we are a single stock ETF, so you do have a lot of risk and not much diversification. The second risk, and it is pretty prominent, we can see if MS ends up going to say $1,000 per share by next week, we're not going to see any of those gains because we are capped. If you're looking for capital gains or appreciation, MSTY is not the right investment vehicle for you. This is not designed to grow. Its entire purpose is to generate income. And for this reason, it is very popular to create a balanced income portfolio with MSTY by pairing it with other ETFs such as SCHD, which is up in share price appreciation 214%, not including dividends, with a dividend yield of 4%. Another popular one is going to be JEPQ, which does have a little bit of capital appreciation because it does hold the underlying NASDAQ 100, but we are going to have a lower dividend yield of 11%. So these are just two ETF examples. A lot of people are using some of the dividends from MSTY to invest in some of these safer ETFs, so they have less risk in the future. And of course, one of the more popular ones is going to be SGov. So as we mentioned earlier, there is going to be taxes involved. So a lot of people are going to put a portion of that dividend income into SGov, which is pretty much going to act as a high yield savings, but it's even better than a high yield savings because it has better tax treatment. If your state has a high state tax bracket, then you are going to benefit from this ETF because you only have to pay federal income tax on the dividends from this ETF, and you don't have to pay state taxes, which is very nice. And this is basically a 0 to 3 month treasury bond ETF. They call it treasury bonds, but it really is treasury bills, but it's short-term treasury bills, and it is basically no risk. If we take a look at the chart, you are not going to lose any money on this ETF, basically unless the government goes bankrupt. And the algorithm behind iShares makes sure that the ETF price never goes below $100 per share. And we do see these spikes, but that is because it is paying out the dividend amount. So every time a dividend is about to be paid out, it runs up to the dividend amount, and then after it pays it out, it drops back down, similar to how many other dividend stocks and ETFs work. And this is much better than a high yield savings account because we're getting a much higher dividend yield. If we take a look at the 12-month trailing yield, it's 4.69%. Now that yield has been dropping as of lately, but it's still over 4%, and high yield savings such as Capital One, which is known for its best high yield savings, is only 3.6%. So our final thoughts, can you retire on MSTY? Well, if MSTY maintains even a moderate yield, it's possible to retire on $40,000 to $70,000 invested, a figure far lower than traditional 4% rule retirement planning would suggest. But there are many risks you're betting on. You're assuming that there's going to be high continued volatility in MSTR, and it's going to be stable or rising option premiums, as well as no cuts to its dividend amount. This is a very speculative income strategy, not really a set it and forget it pension fund. And especially since this ETF has only been out since April of last year, there's not too much history to tell if this ETF will continue performing as well as it has over the past year. And so far, it really has been performing amazingly lately. So this ETF offers something rare in today's market, massive income potential from a relatively small investment. It comes with high risk, yield instability, and reliance on a single stock's volatility. If you're pursuing early retirement or aggressive passive income strategies, MSTY could be a powerful component as long as you end up diversifying and monitor it closely.